Lightning flashes behind glass towers in Frankfurt. In Milan, shutters rattle as wine carries the scent of smoke and coal. Across the continent, markets blink in tension. Europe is awake, and its economy exhales uneasily. At the stroke of opening bells in London, Paris, Frankfurt, markets staggered under fresh signals. Equity indices dip, bond yields creep higher, and currency traders lean into the euro's subtle shifts. In Frankfurt's trading floor, the hum of screens meets the drone of distant storms outside. Hints of stress in global capital flows. The euro hovers near resistance. Yields on German Bunds inch upward again, as investors digest global trade jitters and energy uncertainties. A wave of caution ripples through institutional desks, whispers of slowing growth mingling with lingering hopes for recovery. Energy remains the stage's dark actor. Gas and electricity spot prices in Central Europe spiked after transmission curtailments in the grid, while wine farms along the Baltic sit stalled under calm skies. The pressure to source alternate supplies intensifies. US LNG contracts, North African gas, pipeline deals from Norway all hang in negotiation. Simultaneously, subsidies for hydrogen infrastructure flicker under budget constraints. A strategic balancing act unfolds as Europe edges toward a dual dependency: fossil imports and nascent domestic green fuels, with each decision weighted by geopolitical risk. Trade flows strain under tariff renegotiations and supply chain frictions. Steel import quotas loom, with Brussels proposing to slash duty-free quotas and impose heavy tariffs on excess tonnage to defend domestic producers. Meanwhile, German auto groups urge flexibility in EU climate policy pushback against the rigid 2035 ban on internal combustion. Export orders from Asia slow, as global growth softens, squeezing margins in factories from Turin to Leipzig. The tug-of-war between protection and integration hums under neon lights in shipping ports and customs halls. Policy coordination pulses at EU summits and central banks. The ECB holds rates steady, keeping borrowing costs near neutral as inflation hovers around target. Though energy inflation is softening, core inflation remains sticky, and wage pressures continue to simmer in service sectors. National governments debate fiscal loosening to support industrial reinvestment, yet constraints of debt ceilings and political fragmentation restrain aggression. The Commission's new Apply AI industrial plan aims to cede strategic autonomy in key sectors, but money is tight, and cooperation across capitals is uneven. Across regions, contrasts deepen. In Spain and Italy, consumer demand wavers under high energy bills and colder savings buffers. In Poland and Hungary, factory lines sputter as raw material imports slow. In the Baltics, Estonia's oil shale heritage and rising renewables counterbalance import vulnerability. The collaborative vision of a unified Europe strains under national self-interest. And in the East, across borders into Ukraine, the price of reconstruction, energy repair, and accession dreams loom large. Where will the balance tilt toward union or fracture? Europe's tremors echo across the Atlantic. The United States watches with vested interest as the EU ratchets up energy purchases under a new bilateral trade accord. American firms aim to supply LNG, nuclear fuel, algorithms, and defense gear, a subtle recoding of alliance in commodity and tech terms. Meanwhile, US interest rates, still elevated, draw capital away from European assets, pressuring yields at home. Any misstep in Euro-Atlantic coordination could trigger a flight toward dollar liquidity, leaving peripheral markets exposed. To the east, Asia's slowdown signals trouble. Chinese demand softens, and export surpluses to Europe turn inward, pressuring EU industrial margins. China remains dominant in solar panels, battery components, and rare earths whose supply chains Europe still partially depends on. In Japan and South Korea, chip makers pause new capex as global demand wavers, and their ripple across Europe's tech clusters is already discernible in reduced orders. Asia's quiet retreat pulls on European manufacturers. In the global south, European investment in energy and infrastructure is advancing under soft diplomatic pressure. The EU's Global Gateway initiative layers green energy pledges across Africa, creating both hope and a geopolitical chessboard. While European firms chase new markets, China competes in tandem with infrastructure ties already forged. Europe must navigate between aid, influence, and market ambition, all while keeping export integrity intact. Commodity markets, oil, gas, rare earths remain battlegrounds. A shock in Middle East supply or Russian gas disruption sends tremors into European power grids and industry margins. European hedging, reserves, and import diversification strategies linked to global price cycles. In reaction, Asian and US producers may redirect excess volumes, further pressuring trade balances. Europe's late pivot into hydrogen and green metals means dependency on global commodity flows for years to come. Finally, institutional architecture stretches across continents. Multilateral trade bodies strain under unilateral tariffs and strategic industrial policies. Europe seeks digital sovereignty, resisting protectionism while erecting new regulatory walls around AI and data. Its alliances with the US, ties with Asia, and reach into developing regions must recalibrate or risk fragmentation. The tension between synchronization and independence haunts every handshake and signature. In a dimly lit assembly hall in Poznan, a machinist wipes oil from her brow. Her lathe hums, metal shavings glint on the floor. The order book has shrunk, clients abroad postpone projects. She wonders whether her wages will stretch through winter, whether she keep her job. Outside, evening rain glistens on the factory roof, echoing uncertainty in staccato taps. On a hillside in Andalusia, an olive farmer perches over battered soil. Drought has burned his trees, fertilizer costs soared. He contemplates selling half his grove, but subsidy payments are delayed, paperwork tangled in Brussels bureaucracy. He senses that the trade policies he never studied now steer his survival. A cold wind rustles branches, he breathes in dust and desperation. In Rotterdam's harbor, shipping cranes groan against gray skies. A dock worker unloads steel coils, tariff changes loom. He fears sudden rules that make a cargo worthless, or customs checks that strand ships and jobs. His gloves are thick, fingers calloused. Rain mists across the deck. In cold stares he watches containers roll onward, uncertain whether tomorrow's contract will arrive. In Lisbon's startup hub, a software designer codes by lamplight. She works on models for energy forecasting, hoping the Commission's new industrial plan channels investment her way. She sees in data curves the pulse of power flows, the tug of supply and demand. Yet funding is tight, venture appetite cautious. Nights are long, but her hope burns with the soft glow of screens in her apartment window. Near a coal-to-hydrogen pilot plant in Brandenburg, an engineer tinkers with piping. Steam hisses, he senses the pivot turning, but resources lag. Budgets slip, approvals hang. He contours blueprints in his mind, dreams of a cleaner grid, but wrestles with legacy inertia. Outside the window, trains carry brown coal past wind turbines, a visual contradiction writ large. In a cafe in Vilnius, a cafe owner watches tourists slow. Energy bills rise, rent must be paid, staff wait. She wonders whether the euro's wobble will deter visitors. She serves espresso bitter and short in the chill morning air. A pigeon flaps past the shuttered square, and she recalls when business felt freer, less tense. In Kyiv, reconstruction workers' hall breaks on shattered streets, wiring and pipelines overhead in ruin and resilience. They rebuild houses, energy lines, livelihoods even as conflict shadows the border. They push through winter, dependent on European funds, uncertain of accession timelines. They breathe cold mornings in tents, dreaming of normalcy amid rubble. Dawn arrives over the Danube, mist drifting like uncertainty across capitals. Leaders, financiers, engineers all weigh risk and resolve. They know that the next 24 hours echo into years, that policy tremors now determine the shape of an industrial century. Quiet in the early light, Europe waits. Cooling winds carry diesel and ozone, the grid hums under shifting load. Factories restart, farmhands step into fields, trains roll again through border crossings. Every footstep, every circuit, carries intention. Europe's nerve is tested, but the continent's breath steadies. Whispers of diplomacy pass behind closed doors, phone calls, summits, agreements in flux. Investment flows teeter over thresholds. Behind bitumen roads and cobbled alleys, citizens brace for changes in price, ambition, and identity. The canvas is wide, the lines delicate. Even in tension, life persists. Cafeterias open, children laugh, markets tick upward again. Europe's economic pulse, fragile and bold, continues its narrative. And somewhere between the market's pulse and the human heartbeat, tomorrow quietly begins.